Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies you need to follow for this fresh and new day as well. Now remember, we'll start off with what has happened thus far, what is the global cues and the setup that we are looking at, and of course, what is of importance for you as an investor to keep in mind today as well. Remember, as of yesterday, we did see some buyer exhaustion coming in after 8 days of a rally on the Nifty, which actually slipped in trade and ended in the red. That's the exact scenario that played out, a 90 point of a trading range that brought to an end the 8 days of an up move. However, that does not take away the fact that the Nifty did defend 25,000 mark comfortably as well. Now, of course, we also will be looking at how the Reserve Bank of India has issued directions to regulate payment aggregators. That's going to be of importance to us, and we're going to be looking at that. There are also some, important bullion coverage as well that we will be doing, as gold has hit a fresh record high yet as well. Investors are betting big on a Federal Reserve rate cuts this week, and of course they're also weighing on the scope of more monetary easing in the coming months as well. So that's also going to be keeping a keen eye out on as well. We are also going to be focusing on a very important aspect that the US and India trade talks could see some closing of the gaps as of today, as key officials from the US have arrived in India last night, and today for a one-day meet we will be looking at some trade talks to take place as well. What's happened overnight on the Wall Street? We've seen that the US markets have closed higher ahead of the Federal Reserve meeting. The S&P 500 advancing by 0.5%, finishing above 6,600 levels for the first time. We have seen the Nasdaq also climb by 0.9%, again a record high level there. The Dow Jones Industrial Average edged up just about 0.1% in trade. Now, Asian markets also remain quite buoyant in the morning trading session, taking the cues from the Wall Street, expecting some rate cuts coming in on Wednesday. And of course, the Asia Pacific Index, the MSCI Index, that's hovering near a record high level as well, buoyed by a large part of moves that are coming in, largely from Nikkei and Kospi today. Let's actually welcome our guest on board. Mr. Vineet Bulinchkar is joining in, the head of research at Ventura Securities, to give us a sense of what exactly should the markets be looking at now. Warm welcome to you, Vineet. Good to have you with us. Good morning. Help me understand, what's your fresh take on the markets? We've consolidated and tried to hold on to that 25,000 mark now for the last couple of sessions. Do you think all eyes will again be back on how the trade talks really move from here to take the markets to the next leg of the rally?
So I believe that yesterday the merchandise number, export merchandise numbers that came in were pretty encouraging, because that was the first month when after the temper tantrums, Trump tantrums. Uh, the fact that they are here in the city to, iron out and finalize a FTA is very, very positive. And, India is on the threshold of signing totally 10 FTAs. So all these things go very well in terms of, market sentiment. And Nifty is trading well above the 25,000 range, consolidating here for the last few days. Today is also a settlement. So, we could see the Nifty climb higher from today's levels. I think there would be some short covering that comes in, and expect the market to remain buoyant going ahead.
Absolutely. So, Vineet, how are you looking at the key sectors then of importance at this point in time? Are you looking at the export-oriented sectors in hopes that there could be some easing on the trade tariffs front, or are you looking at the domestic themes that are already, looking at what will entail after the GST rationalization comes into effect next Monday?
So, after today, I think that it would be time to start loading up on export stocks, depending upon what is the outcome of the meeting.
Yeah.
Uh, I presume that it could be positive, but keeping the overall geopolitical scene in mind, you know, with with our LOP expected to blast an hydrogen bomb, anywhere it could go from here. So, but I believe that on the overall scene, you don't expect US to be left out of deal making, especially Trump, who's touts himself to be a master deal maker. So I'm sure that they would be looking to get a deal going with a face saving for Trump. And I think that kind of window has been created by Mr. Modi when he said that I am now willing to meet with Mr. Trump. So
Okay.
that seems a little bit positive, and so I go in with a little bit of positive into the meeting.
Okay, 25,100 is back with us, viewers, as the pre-open tick is on a higher side. You can see 25,081 right now on the Nifty. So we'll just wait to find out how the pre-open trade really settles and which are the sectors that are going to be of importance and of momentum to really look at this point in time as well. Vineet, another important thing that's taking place is with respect to the other asset classes beyond equities. I mean, look at gold and silver. There is no stopping in the kind of rally that is unfolding ahead of us. In the last 1 year or so, I think 50% of a rally is what we've already seen on gold, and a similar quantum in silver as well. And look at it when the Nifty has almost given just a flat return. So when we look at, as an average investor looks at, gold versus silver at this point in time, there's bound to be a lot of FOMO that's existing in investors, that even at highest possible levels, when people were holding back their investments, they should have just gone ahead because there is no stopping in gold and silver. How are you addressing all those concerns of your clients?
So, I would just like everyone to do a very quick take into the past to 1935. For many years, silver was kept steady at about, gold was kept steady at about 35 ounces to dollars to an ounce. And I think around World War II, when the Bretton Woods was formed, you know, uh, gold jumped to about $44, 42 or 45. I'm not sure of the exact number. After that, till 1969, 1967, 69, it was fairly constant. And that is a time when the US started running out of, their they got into a financial mess. Their trading partners were Europe, and they were only expecting payment in gold. And then you saw a massive rally play out. So from $35 to $44 an ounce to
Wow.
$800 in a matter of a decade is what gold did, right? And so we are having the same kind of situation persist now. And today, when the US is cutting the rates, so we're talking of three successive rate cuts to uh, to pump the US economy. You can imagine what gold would do, because in from 1969 to 1981, the Fed rate actually went to 20% before they could arrest the bull market in gold. You know, so when you move from $5 trillion in 2035 to $37 trillion in a period of 20 years, you can imagine what could possibly happen to the price of gold going ahead. So I'm just drawing a parallel from a super bull market that played out. And we are in the midst of another super bull market that lasted for more than 10 years. We don't know how much this would last. But generally, super bull markets in commodities range from anywhere above 10 years to 20 years.
Wow. So there could be a long Super Bowl trend that is still currently underway. So do you think that even at these levels, if somebody has still not participated, one must even go ahead and do that now?
See, I think that it's very difficult to say what will happen, because we've not had this kind of picture play out.
Yeah.
So my advice would be to if you have the stomach to understand what I'm saying, then you can invest, but please don't sell your gold. Is the only advice that we'll do. Indians are very well stacked in terms of gold. And there's one more data statistics that I'd like to give you. If you ever take the total gold mine and divide it by the population, it comes to few grams per capita,
Wow.
right? So gold is such a scarce commodity, and it used to be 24% of the wealth allocation in 1970s. So right now, only central banks are at about 20-30%. you know, China and India population is way up there in terms of gold allocation. Everyone in India and China has gold. Rest of the world does not have any kind of gold. And so whether you accept a Bitcoin as a store of value, or that bubble also collapses, is a question mark. Until then, gold will completely keep appreciating.
Okay, fair point. Let's also discuss on some of the other aspects then. Federal Reserve meeting is on the way, and we will see tomorrow that the rate decision will be taken. Most of the markets are already pricing in a 25 basis points of a rate cut and probably a continued easing even going forward from here. How do you see that by way of understanding how the foreign flows are going to be shaping up in such a scenario?
So, foreign flows are not relevant to our markets in terms of how the, rupee markets have been able to hold
Yeah,
the markets up. What is more important is that the absence of selling happening is just good enough for our markets to go up. But there is another balancing factor coming in that the IPO market is still sucking a lot of money out.
true.
And over the next few days, I think we are going to have a significant amount of capital being raised, which can compete you know, which can compete with the secondary markets. But
Yes.
I think that the trend in the secondary markets is extremely buoyant, and we could see the market move up on, pure sheer lack of selling from the FIIs.
Okay, fair point. I hope this has also given you some sense, viewers. We'll just take a look at how the markets are looking at this point in time. Still about 27 points higher in trade on the Nifty. And, of course, we'll be waiting by to see how the markets settle in the pre-open trade. Remember, we are going to be looking at signs as to whether there is a continued momentum in some of the PSU-related sectors. Remember, it started off on Friday with defense moves. On Monday, it was railways. And, of course, we'll be looking at the other pockets as well within the PSUs, and that's one theme that I would want to discuss with Vineet as well, to how to look at that theme as well. So Vineet, are you focusing yet again attention on the PSU basket, which has so far been lying low for some time? Is this theme again ready for another leg up, or will it take time?
No, I think, the market is attaining to the fact that, the government capex will continue to be robust. If you're able to tide over the uh, current situation where, government has to give a lot of leeway to other sectors, and we have to take hits in spite of GST and etc. etc. I still believe that participation in railway stocks has been minimal.
Yes.
Defense is moving well, so I expect infra and capex related themes to do very well. PSUs fit that basket perfectly, and hence we could see a good rally play out from here. But I would say that, let me put it this way, is that the downside is limited while the upside could be quite decent.
Okay, at these levels also, would you be comfortable to look at accumulating defense and railways both, or only railways at this point?
I think railways has been the kind of, not seen sector allocation come in. So that
Yeah.
sector would come into the limelight.
Okay, fair point. The markets have settled just a tad higher above the flat line. 25,073 viewers. You're still looking at large part of the sectors hovering higher. Only the financial services and the banks could be stepping back, is what we are given to understand. In terms of the sectors, again, oil and gas, autos, realty could be back in focus, and even media stocks, and also some of the mid and small cap stocks also could be in focus. On the Nifty, you're looking at Adani Enterprises opening higher. Remember, there's a news flow I'm going to be sharing that with you in just a bit. TCS, Ultratech Cement, Cipla, L&T could be other names that could be opening higher, and of course we'll be looking at the railway related stocks like RVNL, or maybe names like IRFC for that matter. Even some of the power related names like NHPC and NTPC Power Finance Corporation at that point in time. We'll also look at across the board what's happening on that space. But let me just read out a few stocks that you should keep in your mind, and we'll of course take one view from Vineet also on the same. Adani Enterprises is going to be in focus. It's the flagship company of the Adani Group. It has secured a letter of award from National Highways Logistics Management to build a 12.9 kilometers ropeway from Sonprayag to Kedarnath. This is cutting the travel time from 9 hours to just 36 minutes. That's a huge one. that could be coming in there. Let's take another one. This is NCC. The company here has received a contract worth about 2,090 crores from Water Resources Department in Bihar for constructing Barna Reservoir project in Jamui district, including the dam structures and irrigation channels to be executed in 30 months from here. NCC will be in focus. We're also looking at John Cockerill. The company has received an order of about 80 odd crore rupees from Tata Steel to design, engineer and manufacture of the ARPA plants as far as Jamshedpur is concerned. That's going to be important to watch. Mishra Dhatu Nigam is going to be in focus. It has secured a new order worth 136 crores, taking its total open book order book at 1983 odd crore rupees as of date. NTPC Green Energy will be in focus. The company has successfully commissioned a 100 megawatt lot 6 capacity, taking cumulative operational capacity to 400 megawatts out of the total 500 megawatts of the IRCON renewable power space effective from September 17th is what we are given to understand. That's also going to be in focus. And of course, we are looking at Trans Rail Lighting again. The company has secured new orders worth 421 odd crore rupees, a major transmission line project also in the new African market. So those are some of the names that you could definitely keep an eye out on. Starting with Adani Enterprises, we've been discussing Adani stocks with you for a fairly long bit of time, Vineet. Your sense of this new order flow that has come in for the flagship, and do you see a renewed interest across the board on the Adani stocks yet again?
So, if you see the valuations of individual stocks in the large caps or even the primary indices, Nifty 50, 100, 200, 500, you will find that a lot of stocks are at fair value and, people are finding it difficult to decide where to allocate money. Uh, Adanis are quoting as per venture estimates at about 50% of their fair value. So I think that they provide a very reasonable risk reward potential, and I think that will keep getting cognizance in the market. Other things that we need to notice that a number of brokerages have started now coming out with notes on the Adani basket of stocks, and that helps you understand that uh, the time may have come for these stocks to perform. Other things that we also need to take in account is that there has been some substantial selling of funds who had invested during the post Hindenburg time. It's been nearly 3 years, and some of them are sitting on decent gains. There has been profit booking that has happened without actually creating considerable damage in the prices of the stocks. So I think from a risk reward perspective, Adani uh, pack of stocks provides you with a significant valuation comfort. They haven't performed really, and I think it is time for them to play catch up with the rest of the market.
Okay, fair point. So that's the Adani Group, and that's where we have to keep an eye out on as well. I also wanted to discuss in depth with you, Vineet, on Reliance Industries, especially when we talk about the upcoming Geo Platforms IPO that's coming in the first half of 2026, and that's bringing back focus on Reliance Industries. We also have a Citi report today that's actually highlighted a couple of points. I want to just highlight that for our viewers as well. They have a buy rating and a target price of 1690 for sure on Reliance. They're saying that one, they have a discount concerns for RIL once Geo Platforms is listed. They are unwarranted given the proposed changes to listing requirements by SEBI. They also expect the market to now align with the view that SEBI has over the weekend, which has finalized these changes, thereby reducing the minimum public offer size for IPOs of large companies below $57 billion of a market cap, which Geo would comfortably qualify for. Now, they are also saying from 5% to 2.5% this has been brought down, and also materially relaxing the timelines for meeting the requirement for the minimum public shareholding requirements as well. This reinforces two key positives that they have marked out. One is removal of a key liquidity overhang for Geo's potential IPO with a $3 billion of a supply, and also largely dispels the holding company discount concerns post the listing of Geo given the low float. How are you looking at all of these concerns that are being allayed? What does it mean for Reliance Industries and the shareholders?
So value unlocking is clearly given now. The regulator is getting quite comfortable with the size of the issue.
Yeah.
Also, the issues are very big, so it will be like a LIC kind of situation where your liquidity is not very much in terms of number of shares that are offloaded, but this the market caps are huge, so there is enough and more for everybody. They've also gone very slow on the timelines to increase it to propose 10 years from 3 years. So I think all these hold good for the primary market, and Reliance will be one of the beneficiaries of this, along with a host of other government listed companies. However, the low
Right.
float will lead to, in the MSCI, their free float criteria impacting the valuations and discount of these stocks for Reliance Group.
Okay, fair point. Let's quickly look at how the markets are shaping up. It's 9:15, 25,103. We are above that 25,100 mark yet again, 31 points higher. All the sectors barring the Nifty Bank and the Nifty Financial Services Index, they are slightly lower in trade. But let's look at the metals that are shining bright among the sectors today. Almost a 0.25% of an uptick there. Broader markets, realty, oil and gas also ticking higher. Let's look at the Nifty movers. Adani Enterprises almost a percent up. Tata Steel is up by 0.4%. Adani Ports is now climbing up as well, 0.4% higher. We've already discussed the Adani Group at large with Vineet. L&T, TCS, that's the other two stocks that are holding up. On the downside, you have Nestle, HDFC Bank, Asian Paints, Titan, BEL, HCL Technologies as those stocks that are still lagging behind. PSUs up by 1/10%, NHPC is higher, Concord, BPCL, IOC, HPCL, all the three OMCs, NTPC, Coal India. These are the other movers that are on the positive direction as far as the PSU names are concerned. Anything within the Nifty 500 basket that needs attention right at the beginning of the trade at this point in time. We'll wait it out and see for some, names that we could mark out for our viewers there. But let me welcome Arpit, who's joining in with us. Arpit Beriwal, the analyst for derivatives, wealth management at Motilal Oswal Financial Services. Arpit, hi. Warm welcome. Good afternoon, good morning to you. Tell me, what exactly is your sense as far as the markets are concerned? At 25,100, we are again making an attempt to climb up above that. Yesterday, we marked out, snapping of the 8 days of a winning run in the markets. What's your sense?
Very good morning to all. So looking at the headline indices, if we talk about Nifty particularly, Nifty is slowly, steadily moving higher. So on the weekly time frame, it is definitely holding its gains. And if we see the pace of buying from last 7 to 8 days, we have seen good recovery, but the pace of recovery has been very much slow. But the good part is that it is holding its higher levels from last 6 to 7 sessions. So look at the overall data-wise on the daily and the weekly time frame. So Nifty range has shifted higher from 24,400 to 24,850, 24,900 levels. And now today being the weekly expiry, a sense is that Nifty overall sense would be 25,000 would be a key level to watch out for. And till it holds above 25,000 levels, a stance would be positive for an upside move towards 25,150, 25,200. Along with that, one thing we have to keep in mind is writing is intact at 25,100 strikes. And so far, the week has been in the grip of the option writers. So definitely a range bound to positive move is expected. Immediate support for Nifty would be 25,000. Until it holds above that, a stance would be positive. Index is likely to consolidate between 25,000 to 25,200 for the going forward 2 days and for coming couple of days.
Okay. Any stock ideas that you'd like to highlight, Arpit?
Yeah, so there are a couple of ideas. If we see broader markets are relatively outperforming, and one would be from the NBFC space. That would be first would be L&T Finance. So if you look at the space overall, banking has been underperforming, but NBFCs have been outperforming. And if you look at the chart structure of L&T Finance, it is trading at life high territory, strong uptrend on the daily and the weekly setup, monthly higher high structure is intact. Daily scale has given a fresh range breakout above 235 levels, slowly steadily moving higher. So one can go long with keeping stop loss at 230 for an upside move towards 250, 255 levels positionally. Second would be from the reversal play, that is PPL Pharma. So if we look at the chart structure of PPL Pharma from the healthcare space, pharma space, it is from a strong base formation on the monthly scale near 200 levels, kind of a bullish engulfing pattern. On the weekly scale also it is consolidating, but the good part is on the daily scale, a kind of a pole and flag pattern is in formation, and a closing above 204 can definitely see a good move towards 250, 220 levels. So with the support of around 197, one can go long with for an upside move towards 250, 220 levels. So L&T Finance and People Pharma would be our two preferred picks for the coming week.
Got it. Okay, coming back to Vineet, then Vineet, I think it's the auto space that's again, driving in the fast lane now, 0.7% higher. M&M, Hero Moto, they're all up in trade. You're also looking at, even four-wheeler names are now climbing higher. Maruti, you have Eicher, Bajaj. Across the board, there is a lot of momentum here. What's your current approach to the auto space? Are you building up the positions right now? Are you being very selective at this point in time? After the stocks have already rallied 6 to 17% from 15th of August, from the time the GST rationalization announcement was made by Prime Minister Modi, from that time there's already been some momentum. So do you think this will carry on further, or do you think that now is the time that one should just wait it out?
I think stocks like M&M, Maruti, and Hero Honda are yet see significant upside, and these three stocks are what I'm betting on. The rally in autos is far from done. We're going to see a lot of catch up happening in auto ancillaries, so it's going to be massive long stretch Diwali for this sector.
Okay, got that. Let me just quickly mark out a few more movers there from the, Nifty 500 basket as well. Well, look at NCC. We marked out that for you viewers on the back of news flow. The stock is moving higher on the back of, huge volumes there as well. We marked out the stock for all of you to really see, 2.5% higher for this one. You also have a lot of other names like Sejal Glass is moving higher in trade. Orient Technologies, Indocount Industries from the textile space is higher. Greenlam Industries, SRM Contractors, those are some names that are moving up. Arpit, anything from the broadest index that you'd like to look at?
So, Sakshi, if you see the broader market is relatively outperforming, and if you look at the sector-wise, definitely buying interest is seen in selective sectors. So, if you look at the sectors such as, for example, as we already talked about NBFC has been a core sector. Along with the capital space, capital goods space, Siemens is looking very strong. So, if you look at the chart structure of Siemens from last couple of months, it was consolidating, but finally on the weekly, it has given a range breakout above 30 to 50 levels, and yesterday it was holding well. Today also you have seen good recovery from the lower levels. So I think Siemens slowly, steadily, we can see a good move towards 3400, 3450 levels. Apart from that, metal index is relatively strong, and definitely a pick would be from the metal index, JSW Steel. So a very strong uptrend on the monthly scale, consolidated on the daily scale, forming pole and flag pattern. So small follow up buying above 1110 can definitely can head towards new life highs towards double 130, double 150 levels. So I think from the capital space, capital goods space, Siemens are looking good, and from the metal pack, JSW Steel.
Okay, fair point. Keeping that in mind as well, I think pharma space is also showing us some ticks on the higher side. Pharma has been lying low, Vineet, for some time now. What's your fresh approach here? Do you still believe a lot of analysts have been keeping a keen eye out on the healthcare space, the hospital space, looking at the fact that this is one domestic area which is not touched by either tariffs or any of the changes that are happening, and therefore one should look at that as a safe haven. How are you looking at the pharma and the healthcare pack?
I think the pharma pack one should go with all the CDMO stocks. I think they will continue to do well. They will continue to outperform.
Okay.
Domestic pharma does not have a real uh, great pricing power. The export-oriented pharma units are having an overhang of the possible pharma tariffs that play out from September 29th. So I think valuations are rich. This sector will still keep be under the radar until there is some kind of clarity on pricing in the foreign markets.
Okay, any stocks that you'd like to mark out for our viewers here within this space? Are you looking at a Syngene, Divi's? What really looks or appeals good to you when it comes to the CDMO space?
Actually, I think you should look at the diagnostics. Diagnostics are not in the radar of investors. There are a lot of value stocks there. Krishna Diagnostics got a very good private-public partnership platform, doing extremely well, offering very very strong professional services at discounted rates to the masses. We like the recently listed other diagnostic chains that are there. So I think investors who want to have a value pick right now, they are not in momentum. Will find decent stock picks out here.
Okay, fair point. Arpit, what about you within the pharma space, healthcare space? Anything that takes your attention as well?
Sakshi, if we see over the pharma pack has been relatively resilient. So in spite you have seen some choppiness in the market in last couple of months. We have seen good recovery also in last few days. But overall pharma as a pack has stand out, and particularly we look at the healthcare space. And if you look at the healthcare space, particularly Fortis and Apollo hospitals are very strong technically. So if we first talk about Fortis, a very strong uptrend on the monthly and the weekly setup, trading a life high territories, and slowly steadily the base of the stock is shifting higher. So from 700 to 800, 800 to 900, and now around 970, 980 levels. So look at the chart setup is definitely there's some more breather, and the room is there for the stock to head towards new life high basis and touch four-digit figure eventually. So Photos would be a one preferred pick from the healthcare space. Along with that, Apollo Hospital. So if you look at the chart setup of Apollo Hospital, a very strong upturn on the monthly scale. On the weekly scale, it is consolidating from last 4 to 5 weeks. But the good part is that it is holding above its short-term moving averages, taking support in its 20 DEMA. And I think now going forward, a base would be around 7,600, 7,700 would be a major support zone. Slowly, we can see a move towards 8,000, 8,200 levels eventually with a time frame of 1 to 2 weeks. So Apollo Hospital and Fortis would be a preferred pick within the healthcare space.
Okay, fair point. I hope this has also helped you out. Viewers, we'll also mark out a few other stocks from the small cap basket. Godfrey Phillips is higher by nearly 6%. Reddington is higher. Anantraj is moving up in trade as well. You also have Welspun Living, Aegis Logistics, Trident, many of these stocks that are hovering higher in trade. Vineet, have you been looking at these tobacco plays? Godfrey Phillips, what's happening here over the last couple of weeks, months, in the flavor that they are in, despite negative impact that we've seen from GST, a higher tax on the tobacco, products. How are you looking at such companies, and what is leading to this outperformance?
Beats me because logically these stocks have performed very well, and after this sin tax has gone up. Obviously, volume should kind of be subdued at least for a few quarters. But the fact that they're holding up clearly tells you a couple of things, that there's under ownership of them, and it's still in the control of strong hands.
Okay, got that. All right. Arpit, let me also mark out for you. We were discussing a large theme with Vineet before you joined in. That was on the PSU space, especially defense and railways. Defense again is picking up pace. Look at BDL, BEL, look at an HAL, MTAR Tech, Mazagon Dock, Paras, all of them, solar industries, they are in some momentum. What's your fresh thought here on the trading aspect on the defense stocks?
If we compare the chart structure of defense and railways, so
Yeah.
definitely yes, actually, defense stands out comparatively because the bigger trend of the sector is positive. So overall, we have seen a sharp correction move in last 1.5, 2 months from almost 15 to 20% from all-time high. But definitely, if we see at the monthly and the weekly setup, again good recovery seen from the lower levels. So standout sector between the railway and defense would be defense, and within the defense, if you look at the chart structure of BEL, Bharat Electronics, that has been a very strong counter within the entire defense space. So it has fallen the least from the entire space, and it has shown good recovery from the lower levels. So I think BEL has formed a strong base near around 375, 380 levels. And I think that going forward, as soon as we see good recovery in the defense sector, BEL is likely to lead towards 410, 420 levels. Along with that, a high beta counter that would be from the same space, that is BDL. So the stock corrected almost from 2100 to 1500 levels in last couple of months. A good base formation has been seen on the weekly and the daily time frame. Closing above 620 can definitely see a good move towards 1660, 1700 levels. So BEL and BDL would be a preferred fix from the defense sector. From the railways sector, we would better still avoid. So though we have seen some bounce back move from the lower levels, but definitely that is a bounce back move. And the real question is whether it's able to sustain its gains or no. So we'll be closing watching till this weekend whether the railway stock can still hold its momentum or not.
Okay, got that. Let me also look at some of the other key areas when it comes to the primary market space. Vineet, we have to ask you. This week we will see 3 new listings, including of Urban Company, Dev Accelerator, and we'll be also looking at Shringar Mangal Sutra. Today there is another IPO that's opening up. That's Euro Pratik IPO, 451 odd crore rupees of an IPO. They're decorative wall panels company as well. Anything from these IPOs that has come of interest to you that you may have advised your clients on?
I think Devex and Urban Company clearly stand out for me. Urban Company has huge time in terms of upside potential. Service company, one of its kind. It's like a Swiggy Zomato kind of moment, but not to the scale of what Zomato and Swiggy have done. Uh, but that definitely looks interesting. I think we could see a 30% upside based on whatever valuations that we've done on this stock. Wave Accelerator has seen very strong demand, one of the record flows coming in, and I think that will have a stellar listing.
Okay, got that. So, after the stellar listings also, are you advising investors to look at it or have they missed the bus already?
No, I think uh, uh, you know Urban Clap looks pretty good. I said as we've done a lot of work on that, I think it will do really well going ahead. So if you bought it, be invested. If you're looking to buy, just wait for the prices to subside. Let the management come out and give an outlook on the stocks, and that time there would be a fresh assessment of their potential.
Okay, fair point. Well, thank you so much then, Vineet, for being with us on the program and helping us with all your insights across secondary and primary markets. We'll definitely take few chunks out for all our viewers to really catch up on all the insights that you've shared with us on the key sectors, stocks that you're looking at, and how do you look at the opportunities from here. Thank you so much. Appreciate your time.
Thank you.
All right, viewers, we'll continue our conversation with Arpit. Then, Arpit, first 15 minutes of a candle is out, 25,112 right now, 44 points higher. So, we built up on the morning move. What exactly is your thought on the market?
Going forward, as a stance would be similar, actually, as we discussed, 25,000, 25,050 would be an intraday support level for Nifty. And from last 2 to 3 days, index is consolidating within that zone itself. But the good part is that initially it was failing to surpass 25,000, and now after surpassing 25,000, it is hovering above 25,000 levels. So being a weekly expiry, a stance would be till Nifty holds above 25,050 levels, 25,000 spot levels to 2550. A stance would be positive. Having said that, the momentum is really missing. So if we see, though we have seen positivity from last few days, but the pace or the momentum is very slow and gradual. So overall, the supports are gradually shifting higher. 25,050 would be an intraday support. On the upside, 25,150, 25,200 would be the key level to watch out for. Now talking about Bank Nifty over here. So if you see the Bank Nifty structure wise, slowly the Bank Nifty is also moving higher from 54,200. It has moved to 54,900 levels in last 6 to 7 sessions. But the pace is very slow and steadily. So immediately the support has been shifted higher from 54,200 to 54,750 levels. On the upside, 55,250 would be the key hurdle level. And I sense that selective banking is likely to be in action, and index is likely to consolidate between 54,750 to 55,250 zone going forward.
Okay, fair point. I hope this has also truly helped all our viewers out in identifying the right strategy on the markets then. What else is sticking up in trade? Well, we have autos, oil and gas, metals, infra stocks definitely in focus, media stocks in focus. Small caps, some of them we already marked out are definitely in flavor. What's on the downside is FMCG and PSU banks now taking some profits off the table at this point in time as well. Within the broadest index, any other names that have pulled up? Most of them we've already marked out. I think MK Global is picking up pace as well. KPR Mill is another one that's also pulling up higher. You also have some names like Sri Pushkar Chemicals that's higher in trade, and smaller names like Tatva Chintan Pharma Chemicals is also higher in trade. So many of these interesting names are finding their way. On the textile space, Arpit, are you finding out any moves? We are looking at Welspun, KPR Mill across the board. There is some move, and we'll also focus on Tatva Chintan in a bit. This has been one of the favorite IPOs, recent IPOs of retail investors as well. So we'll look at that separately. But let's look at textiles first.
So Sakshi, if you look at the overall textile sector as a whole, it has been very much selective and news driven, definitely. And we have seen that kind of moves definitely from the space itself. So if you look at the chart of Welspun Living particularly, though it is trading on the downward trend, so definitely a base formation has been seen on the monthly and the weekly setup. Today it has negated the formation of lower highs on the daily scale, forming a strong bullish candle. So the upside can be seen towards 128, 129 levels. Having said that, the bigger structure of the stocks, majorly stocks are still in weakness. So you have to play this range between 118 to 130 levels with the immediate support around 118 for an upside move towards 130 zones.
Okay, and what about this Tatva Chintan Pharma? After a long haul, this stock has actually come back into momentum. Would you be looking at it for a fresh move here? I think about 7% higher in trade today with strong volumes there. Do you think there is more upside?
So if I look at the chart structure, definitely if we see over the sector specific wise, a strong range breakout has been seen on the daily and the weekly scale with good surge in volumes. So right now the stock is already up by 5 to 6%. So initially hurdle was around 1100 levels. That was the initial hurdle level. And now looking at the chart setup wise, definitely the stock can head towards 1150, 1180, 1200 levels. So setup wise, this relative looks better for an upside move towards 1200 plus levels.
Okay, fair point. I hope this has also truly helped you out, viewers, in terms of how do you look at the space and some of the stocks there. Pulling up some of the other names. Okay, from the PSU space, power is coming back into focus. Look at NTPC. It's climbed to the top spot on the Nifty right now, viewers. 1.2% higher in trade. Power grid is also among the top 5 movers on the Nifty. So the power space is clearly coming back into focus. Arpit, we do know in 2024 this had really moved, as a theme that everybody was tracking very, very closely. Most of the investors were going big on NTPC Green. At that point in time, the IPO was supposed to come. But this year so far, the power space has stocks have actually taken a back seat. Are they coming back into momentum?
As rightly mentioned, we have seen a stupendous rally from 2022 to 2024, and post that we have seen a sideways time correction. But particularly talking to look at the overall power space as a whole. So right now, also if you look at the structure wise, definitely they are trading in a wrong channel. And if I look at the setup wise, definitely the underperformance is still there. So it will still take some more time for the counters to get the next gear of rally. Apart from that, selected counters are still performing well. So if you look at the likes of, for example, Tata Power. So Tata Power, if you look at the chart structure, classical inverse cup and head and shoulder pattern has been given breakout on the daily scale. So it's a good surge in volumes, surpassing this 200 DEMA, a strong range breakout. So I think selective pocket still looks good, and we have to play a very stock specific approach within this sector. Tata Power looks definitely look from here on with stop loss around 388 for an upside move towards 400 and 420 levels.
Okay, fair point. I hope power space stocks is also something that you will be tracking now closely, viewers, for the move that Arpit has highlighted there. Anything else that's taking up in trade? Okay, we are looking at metals that are shining bright. Anything within the metals pack that appeals to you at this point in time, Arpit?
Overall, if we see, actually, metal has been relatively resilient. And if you look at the chart structure of typical heavyweights counter, particularly JSW Steel. So JSW Steel has been a preferred pick, though the nature of the counter is slow and steadily. But what is important, it is trending and trading a life high IDs. So technically, at monthly high time frame, forming higher rise, higher low structure on the daily scale, consolidating from last 6 to 7 sessions. But today, looking at the setup, definitely the stock is ready for its next move towards 1120, 1140 level. So JSW Steel would be a preferred pick within the metal pack, and definitely with supports around 980 1108, the 1080, definitely that would be a major support zone for an upside move towards 1130, 1150 levels.
Okay, since we're focusing a lot on commodity space, let's also focus on the cement basket and the construction space at large as well. HSBC has come out with a report today on cement. They're saying there is increased consolidation that they are saying. Top 4 market share is now about 57%. That's the top 4 companies. And, they are at a leverage at smaller companies, positive for pricing also going forward from here. They're looking at FY26 as a peak of capacity additions in the current cycle itself. They are preferring Ultratech Cement with a buy, a target price that they have raised to 15,410. They've upgraded Ambuja Cements as well to a buy, raised the target price to 700 from 490 earlier. They've also upgraded Shri Cement to hold with a target price of 32,200. They also have maintained a buy rating on Dalmia Bharat. Target price, however, they have raised to 2,900. They also have a hold rating on ACC with a target price of 2,040. The entire cement basket is in focus. Back into understanding, of course, as to how the GST rationalization will help probably increase the sales and volumes, and we any which way see the second half of a current financial year or the calendar year as well, where construction activities also speed up. How are you looking at the cement space?
Sakshi, if you look at the particular chart structure of selective cement counters, so we have seen a very good rally in the series of May end to July, June to July series, and post that since last almost 2 to 3 weeks, we have seen corrective phase in the September series. But the good part is that if you look at this typical chart structure of selective cement packs, particularly Ultratech, so the bigger trend of the stock is positive. The stock corrected towards its 50 DEMA, form a strong base near 12,200 levels, and now it will negative the formation of lower highs on the daily scale, and now slowly steadily the stock can again head back towards 12,800 13,000 levels. So from the cement pack, definitely the risk reward looks quite favorable at this junction, at its near its support zone. Along with that, second pack would be preferred pack would be from the cement pack would be JK cement. So the bigger trend of the stock is definitely positive. We have seen a very good rally from 5,000 to 7,500 levels runway, and post that the stock has corrected. So now it's again offering a very good support zone entry point near 6,000 to 6,300 6,400 levels, and slowly steadily the stock can head towards 6,800 7,000 levels. So Ultratech and JK Cement would be a preferred pick within the cement pack for a positional view from 1 to 2 months perspective.
Okay, fair point. I hope the cement basket is also covered pretty extensively for all our viewers to see as to how these opportunities can be seen from here. Since we're talking about commodities, oil and gas is another one as a space that I wanted to discuss with you. OMCs are slowly and gradually inching higher. All the three OMCs are up. HSBC also has a report today on OMC specifically. They have said that there is a support by Indian government which has resulted in OMCs delivering steady stock performance even in a volatile environment, global environment that we are seeing. However, they see upside risks to their consensus estimates even if oil remains at the current level. So they've maintained a buy on BPCL with a 420 target. On HPCL, they have a 520 target. On IOC, they have a 190 target at this point in time. So far, they've remained steady. Crude oil prices are still steady at this point in time. What's your sense on OMCs vis-a-vis the upstream companies?
Actually, if we see overall OMCs has been in the last couple of weeks to price action, it has been lackluster. So
Yeah.
though we have seen some bounce back from the lower levels, but the bigger trend is still in sideways. And look at the chart structure of whether it's BPSL, IOC or HPCL, though they're trading in a range, there's no major momentum as of now. So I think our sense is that it's better to wait for any decisive range breakout on this either of these counters. And as we are seeing, a lot of better opportunities are there in other sectors which are really trending and outperforming. So it's better to stick with the other space that are trending, and we can wait for some better price action or the technical price action breakout to enter into these positions going forward.
Okay, fair point. I hope this has also truly helped you out there, viewers. Anything else which I have missed asking you, Arpit, that you may have pointed out, to your clients that you would like to mark out?
So if you see, look at this counters from the mid cap and small cap space. So if you look at the chart section of Amber, it has been a very strong uptrend. Though we have seen some corrective move in the August series, but it was really strong recovery was seen from the lower levels from 7,000 odd levels, and on the daily scale it is trading at life high territories. So I think from the chart specific wise, the trend is very strong, and I think closing above 8,100 will definitely trigger for a next leg of rally towards 8,500, 8,800 levels positionally from a 3 to 6 months perspective. So Amber would be a preferred pick that looks very strong on the chart, and we can expect good momentum in this counter going forward.
Okay, got that. I hope this has helped you out as well. Let me also ask you on the stocks that are actually either moving very slow or they are trying to slip into the trade. We have now all the sectors, however, into the green at this point in time. So buying emerging across the board. India VIX is lower by 1/10%. You also have now PSU banks turned flat to a positive bias that we can see there. And on the IT pack also you see some improvement. Anything specific within the IT pack that you'd like to highlight? This has been extremely volatile of late. Last couple of weeks this was the space that was doing all the heavy lifting. This week it's rather been low. How are you looking at the IT stocks and what's your approach here?
So over here, our sense is that it's better to stick with selective counters within the IT pack, and rather than try to chase every move, be with selective moves within the selective counters. And if you look at the chart structure of eClux particularly, we have been very much positive on the counter, very strong on the monthly and the weekly setup. consolidated on the weekly scale from last few weeks, but the good part is they're holding at life high territories and with support shifting from 4,200 to higher to 4,400 levels. So definitely eClux would be a stock to watch out for next 2 to 3 months perspective. Our target is on the chart would be around 4,600, 5,000 positionally. So eClux would be a stock to watch out for within the IT pack going forward.
Okay, got that. I hope this has also truly answered your question there. Anything else that's picking up? Real estate, I can see some move on the realty index as well that we are seeing at this point in time. Let me just mark out a few stocks there. Phoenix Mills, Anant Raj, Prestige, Godrej Properties, Raymond, Shobha, and even Lodha Developers. Some moves that can be seen on this one. Festive season, do you think upcoming and hopes of rate cuts going forward from here, can they continue to lift sentiments across realty?
So looking at the bigger time frame structure, definitely the sector has been underperforming. Though we have seen some recovery or some bounce back from the levels in the last couple of days, but I think look at the chart setup wise, definitely would wait for some more trigger for a fresh range breakout on the weekly or on the monthly time frame, and then it would re-enter into these positions. However, having said that, base formation has been done on the weekly scale, so definitely some bounce back move we've seen, and within that DLF looks relatively better. That slowly steadily we can see a good move in DLF towards 800 levels. So DLF would be a preferred pick. One can go long DLF with keeping stop loss of 760 for an upside move towards 800 plus levels.
Okay, got that. Let's come back to the market and the index level prep because the first half an hour candle is already formed. 25,135 right now, 65 points higher. So the Nifty is at the high point of the trade. We are 0.25% higher in trade right now. The Nifty Bank, which had crossed the 55,000 mark yesterday, failed to defend it towards the closing edition. We'll try and understand between the Nifty and the Nifty Bank, where do you see the momentum going? Both the indices are at the day's high point right now. Where do you see the outperformance?
So it would be a very tricky situation if you look at the setup wise. So definitely it's a weekly expiry for Nifty, but Bank Nifty 55,000 is a key level that to watch out for. So I think a sustenance about 55,000 can see a good tick of 150 to 200 points towards 55,200 levels. So I think key level 55,000 be a key level to watch out for Bank Nifty with support around 54,900. Having said for Nifty, Nifty is relatively strong. So I think slowly a move can be seen towards 25,200 levels on the Nifty. Both bias would be positive with key support around for Bank Nifty 54,850. For Nifty, intraday support would be 25,50 levels.
Okay, fair point. Well, all right. Thank you so much then, Arpit, for being with us in the morning edition, helping us all out with all the opportunities that exist in the markets right now. Viewers, there are a lot of moving parts that we have to keep an eye out on. Of course, we'll be waiting by to see if there are any signs from the talks that take place between US and Indian officials as far as the trade talks are concerned. That will be of importance. Tomorrow again, FOMC meeting and the outcome will be of importance as well. And of course, we'll be looking at how some of the sectors continue to perform on the consumption basket right ahead of Monday's GST rationalization implementation as well. So lots to look at. Continue to be with us on Business Today television. Throughout the course of the day, we will continue to get you all the market moves and, of course, decode the opportunities with top market experts throughout the course of the day. In case you have any questions about the stocks in your portfolio, ask them away. Daily calls at 12 noon with Anshul Jain, and as he answers all your queries in Trade Today. So stay tuned. There's a lot more coming up on your screens.